Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown, but this time it's the road version of Ben.
That's right. Good morning, Will. Happy WASD Day to you as well.
Yeah,
I'm speaking to USDA a little bit later here this morning, so I'm on the road today. I got my little visitor name tag on. I'm ready.
yeah. So where are you trying to get to right now?
Well, I'm in St. Louis. USDA is having a national training meeting here today, so I'm one of the guest speakers to talk about some of the work we do and how it intertwines.
Yeah, yeah. Well, and speaking of the work that intertwines, today we're going to talk about the WASD report, USDA's ag supply and demand estimates. But before we get to that, I really want to get a snapshot where we're at currently. So, Ben, what kind of adjustments have we seen this week heading into report day today?
Yeah, so down across the board as we closed on Monday afternoon. Old crop corn for May down 3 cents to 6.54. New crop corn down 5 cents to 5.62. May soybeans down 35 cents to 14.87. New crop soybeans down 23 cents to 13.09. Soybean oil was down just over 2 cents per pound. Soybean meal was down $13.50 per short ton. Old crop wheat for May down 15 cents. New crop July wheat down 16 cents to 6.90. And then that West Texas Intermediate crude oil just down slightly a half a dollar per barrel to trade just under $80 per barrel again.
So what's really been the reason behind this, the expectations? Is this going into the report expectations of some bearish things going on there?
Yeah, a little bit. We've also just got kind of a general bearish tint, I think, to the market as planting season starts, and then just some broader macroeconomic concerns. But U.S. ethanol production was flat on the week, matched the same volume produced exactly 1 year ago. Stocks for U.S. energy products dropped across the board on a little bit stronger demand. Ag export sales were bearish for soybeans, coming in below all trade expectations last week. There were also net cancellations of new crop soybeans, which is kind of rare for this time of year. Corn was at the top end of their range and above the prior week. Open interest and futures positions were flat for Chicago corn, soybeans, and wheats as activity has moderated as of late. Managed money traders bought back. Sorry, I can't talk today. Managed money traders bought back nearly 35,000 net contract corn contracts, creating a small net long in that contract. Traders also increased net long positions in soybeans by 46,500 and increased the net short positions in Chicago wheats. Weekly export inspections were all within expectations. Corn was down week over week, while grain, sorghum, soybeans, and wheat were all up week over week. USDA's crop progress report showed that the nation's corn planting increased 1% on the week. It's still above the 5-year average. I expect significant progress this week. And then the progress report for crop conditions showed 27% of U.S. winter wheat rated good to excellent, and that was down 1% on the week.
So, Ben, really looking at today's main topic, we're looking at that USDA updated supply and demand estimate report coming out here in a little bit less than 2 hours. I don't want to talk too heavily just on the expectations because, obviously viewers and listeners will know what's going on here shortly. But whenever we're looking at this April report, really it kind of sets the tone early in the season as the U.S. really starts catching its full stride within the planting season. So how heavy is this report? How important is it to farmers as they get underway within the fields?
Yeah, so we're doing this before the report comes out, so everybody gets a chance to see how wrong I am when our recording of this comes out a little bit later today. So I'm fully aware of the pressure on me, I guess is what I should say. Now, let me just start off and say that the April report I wouldn't count it as a huge report from at least a demand perspective. USDA will incorporate those second quarter grain stocks numbers for corn, soybeans, and then that third quarter stocks report for wheat. So those will all get incorporated into those old crop balance sheets. As a reminder for folks, corn and soybean ending stocks came in below what was expected to be out there. Wheat stocks came in a little bit higher. So I do anticipate that USDA will increase feed use and decrease ending stocks some for corn. And then I do anticipate them to decrease wheat feeding use and increase ending stocks on the wheat complex. So that's what I'm anticipating for the feed grains. On the soybean side, we might see them make a couple of small revisions just to ending stocks in general, decreasing the ending stocks number for old crop soybeans. But I actually think that the biggest reduction in U.S. soybeans will come in a downward revision in U.S. soybean production from last year. Just kind of related to that smaller stocks number. So on the US side, I'm not anticipating a whole lot of changes on the demand side, but certainly taking into account those stocks numbers. Where we could see the big fireworks would be on the global picture. I do anticipate that production for all three of our crops, corn, soybeans, and wheat, or at least the ones that you and I talk about frequently, will be reduced this month relative to last month. I think a big chunk of that's going to come in downward revisions for Argentina corn and soybean production. And maybe some small wheat adjustments in other places around the world. So,
well, and looking at USDA's tendencies, really they tend to be cautious whenever making large adjustments within these reports, and tend to try and let the market play itself out a little bit before making those bigger swings. So really, when we think about this report, I feel like any decent sized change will be a fair surprise. It's going to be mostly incremental adjustments and maybe some future adjustments to come, but this report might be a little bit more mundane.
Sure. And USDA, I don't want to, they're not like, I'm not trying to say that they're behind, but they have to have substantial evidence to justify moves, or they have to have reason for it. And I just don't see the reasons out there to make big moves on any of the demand categories. And so, and really our markets are kind of supporting, where we're currently at. And so, I know people like us like to see these big changes because it's fun to talk about and it gets things exciting. But a pretty quiet report kind of indicates that we were roughly right in line with where we needed to be. And I think that's kind of where we're at. The stocks report kind of reset expectations, and we'll work those expectations into the report numbers today, or USDA will. But I think where we're sitting at in a market position is, corn and soybean demand, kind of being the steady to weak player here as the market starts to think about what expectations could be for the size of new crop U.S. production. So I think that's where we're at, is a pretty stable old crop market to slightly declining as we kind of work our way through the summer.
Yeah, well, and one of the things that you brought up, I really want to come back to talking about Argentina's production, looking at some South American production, some potential downward estimates coming from corn, soybeans there. So Ben, really, it seems like what we've constantly had the thought or the conversation around watch out for South America, because once they line up production, it's going to come in full force. But with these small revisions down, do you see that providing, I guess, some residual support for U.S. farmers longer term?
So sure, it's tightening the global picture, and I think that does help. Kind of keep global stocks tight, and the price is a little bit higher elevated. The interesting thing out of Argentina is just how big of a player they are in the component market, that soybean oil and soybean meal. Certainly, we've been using more of our oil here domestically in the United States for fuel and other products. I think the biggest question I have is what do those international buyers? I'm going to signal out Europe here for just a second, because Europe tends to be the place where, when we get around to July, they're the ones that are actively looking for product, and they tend to look for those soybean components out of South America. They tend to look for places that have a lot of canola oil or rapeseed component products, that meal and oil there as well. And there's just not those sources. And so, does the European Union, or buyers within the European Union, do they look to the United States in July when Argentina doesn't have anything, and they're scraping the bottom of their bins, and that really increases our old crop demand right before our harvest, or a couple months before our harvest there. So that is a flash in the pan type of bullish rally that we could see later in the summer. Now I'm not forecasting that from the standpoint that as soon as I forecast it, we won't have it.
Yeah.
But I certainly,
you're saying it's a possibility.
I'm certainly saying yes, it's a possibility that late in the summer, when we don't have a lot of old crop supplies, because keep in mind, we don't keep a lot of old crop soybeans or those oilseed products, and South America doesn't keep a lot of, doesn't have a lot of those either. where are those buyers going to be able to get that product? So.
Well, Ben, some other, I guess, macro scale factors or potentially macro factors whenever you're looking at global trade. Obviously, shipping viability is critical in the infrastructure around that. To end last week, we saw some temporary port closures in California just over Thursday and Friday, out there. So really that did cause some holdup on some ag exports, but now that's reopened. Do you see little hiccups like that amounting to much of an issue when it comes to exporting grains and oilseeds?
Not for our bulk commodities. I think we're still seeing some tie-ups in other areas across the country related to bulk goods, but our bulk goods are largely flowing. And the biggest threat I think to our bulk goods is the hurricane season. If we start seeing a increase in Atlantic storm hurricanes, or at least in June, July, time frame in there, doing damage to the port. That's not a time period where we're exporting a lot of soybeans, but it's a time when we do tend to export some corn. And so that could cause some hurdles and some challenges for us.
So Ben, looking ahead, past the WASI report today, what else should farmers and ranchers really be paying attention to this week?
Well, sure. For those of you that are listening, just a selfish plug here. At the University of Missouri, we are having our Abner Womack Ag Outlook Conference tomorrow in Columbia, Wednesday, and it's free for everybody to join. So if you've got time and you want to come on down to Columbia, we'd welcome you with open arms. It's out at the Bradford Research Farm. So that's happening tomorrow all day. Thursday, ag export sales. Friday, we get that commitment of traders data. And then next Monday, just go ahead and put a plug in for next week. We get the National Oilseed Processors Association report next Monday, along with our crop progress and export inspections reports.
So all good things. I know I always loved attending the Abner Womack conference. I love the jokes that he would tell during the intermission sections. Yeah. So Ben, it's always great to have you on here. Viewers, listeners, if you'd like to learn more about what we do or visit our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Well, Ben, have fun in St. Louis. Thanks for hopping on here with me. I'm Will Robinson on Brownfield.